When the going gets tough, the tough gets going. Building a new business is tough enough, sustaining and growing it is just as hard. As time goes forward, everybody gets smarter, more competitive and gets more innovative too. Market risk expands and increases in volatility. Businesses just have to prepare and reorganize to meet these challenges. Cash flow and liquidity is just one of these challenges. Cash flow and liquidity is crucial for business confidence and final profitability and success. Poor cash flow and liquidity is a sign of weakness, or even increased risk under adverse economic conditions. It is hardly impressive to reporting profits while negotiating for loans. We hope this is a timely reminder to reflect on the company's cash flow operations and strategies for uncertain times ahead. Having ample cash flow and liquidity cannot be a bad investment in uncertain times. Welcome to our short presentation on managing cash flows. Times will always be uncertain. Armed conflicts, economic volatilities, currency market malaise, and intense global competition are recipes for uncertain times. Hopefully they come and go as quickly as the flashes of lightning. In uncertain times, defensive strategies are only prudent in order to stay alive, then take advantage when opportunity rises. Central to this is a state of preparedness that will carry the organization through the waves of up and down. Prudent cash flow strategies. Conventional wisdom of cash flow management should be revisited. They evolve around the following: pursue cash business, and minimize credit sales, intensify receivables collection and reduce them to a minimum, dispose excess and idle assets, create liquidity reserves, and negotiate unused bank lines for emergencies. They all seem obvious and everyone agrees to them. Putting that into practice, however, might not be so obvious. More credit sales. Creating revenue through extensive credit terms is never a brilliant idea because the seller sends away the goods and has an empty bank account to begin with. Worse, rental and salaries have to be paid, loan installments too, and so is GST. That is, goods and services tax. Cash flow then already start with a deficit. Competitive pressure is the main excuse to make sales on credit, while marketing people need that to achieve their KPI for bonuses and sales commissions. Modern accounting reports profit ahead of cash flow, but credit sales is actually less profitable. When credit sales are inevitable, then do so smartly. Set up your credit system, build your collection tools, and institute financial discipline. Selling on credit is easy, but collection can turn into a nightmare before Friday 13th. You wouldn't know when the next crisis strikes. Cost of granting credit. The typical accounting system and the software does not tell how much it costs to have credit balances remaining with your receivables. That's the conventional accounting system. If a business has a turnover of $2 million a month and it takes an average of 3 months to collect, it would cost the company $600,000, assuming just a 10% cost of funding with bank loans. That is $50,000 every month in interest expense. What about other costs? Administration, legal and recovery expenses? It's time to calculate your cost of granting credit. Cash flow forecasting and budgeting. Hours and man-hours have been spent on developing the cash flow budget, only to be revised so often like monthly ledger updating. Meanwhile, cash flow remains unpredictable from the beginning till the end of the year while accounting profits are proudly announced. How are the forecast cash receipts determined? What is the confidence level of collection on those specified time in the budget? If the cash budget is to be of meaningful use, these two questions should be candidly answered. If the answers are non-committal, the cash flow budget is then as good as not having one at all. Credit policies and procedures. These are guardians of your trade receivables, not written manuals to be locked away in the finance offices. Sometimes they are in the computer files that got buried under the burgeoning emails. Maybe no one has taken a look at them for a long time. So take them seriously. They are also dynamic and not carved out of stone. change them according to times. Many companies have these policies and procedures, but good cash flow still remains elusive. Why? Perhaps a review of the corporate business policy would be timely now. Collection. Generally, some salespeople believe in getting the customer first, then get his wallet. Sometimes before getting to his wallet, we lose the cheese. Nothing is assured, business is a risk. That sort of argument is a simplification. Life is a risk too, but we take life insurance and take care when we cross the road too. All money owing has to be collected in an orderly manner and in good time. It's time to review again the effectiveness of the collection process. Skills, organization and discipline are all it takes to bring in predictable cash flow. Some review. Principal issues to be considered in your review: concept to business credit, getting it correct, organization of credit control and management, tools for credit risk management, credit policies and procedures, tools for collection management, collection policies and procedures, tools for receivable asset quality, receivables management, that is, receivables analysis, and the credit skills requirements. Key managers and finance staff responsible for sales and receivables management would find this useful to kickstart the improvement of cash flow and credit risk control in their organizations. In essence, this is our 2-day cash flow and credit risk management program to prepare the company for new challenges and uncertainties in the next year. The next move. Cash flow and quality of outstanding receivables cannot be taken for granted. Good customers may turn bad, especially in bad times, while regular payments may fall behind. Staff in your organization come and go, and your company credit policies and instructions may not be followed. Worse, they may not be trained debt collectors. As head of the business development or finance function, the above needs to be noted. Acquire or refresh your perspective before your review and revitalize your finance operations. Talk to us, or contact us at www.finetglobal.com. Thank you for your time and cheers. Thank you very much for your time. And have a nice day.